Okay, welcome back, people. It's another Sunday, and today we're going to be analyzing the markets in a way that is quite different from the way we have always been analyzing it, right? Um, Last week we had a lot of news, I couldn't even track the market last week. Last week, I spent a lot of my time working at the office. You see, this is the problem with working a 9 to 5 job and trying to do trading. Sometimes you're so choked up you miss opportunities. I missed one very, very beautiful opportunity. There was another one I watched as it slipped past my hands, but just because I couldn't touch my phone at that point in time. And I have this rule where if it has gone, you don't chase it. Just let it go. Another opportunity is going to come that week or next week or some other week, right? But nevertheless, we're diving into it today as simple as possible, but we have a lot of things to view today. So without further ado, let's head right into it shortly after the intro video. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9 to 5 job is like. This is literally the whole shebang. There is no hiding anything, there is no pretending, there is no extra editing, there's no fini fumbly. It's just seeing the real raw experience. Alright, so before I continue, if you're new to this channel, I would like for you to please hit the subscribe button, hit the like button, and check out our other videos. We have a lot of videos every week. Every week I drop a video like this where I get to look at what we expect to see from the market in the forthcoming week, right? And in my opinion, I would say it is not easy doing this, but I really love seeing the chart, seeing the way the market plays out based on the information available to us. But nevertheless, thumbs up is cool. It gives other people the notion that this video is worth watching. Like, you can see that the analysis is worth watching. And apart from that, I would say thank you all for coming, and let's head right into it. Alright, you all know, first and foremost, the first thing I love to always look at on this place is the economic calendar, because my dear friends, this is the determinant for every single thing that happens in the market. This thing you see right here, this is the major reason behind it. This and the news, right? This and the news. This is also a form of news, but it's a financial news. So let's head into it. Last week we all had all of these, so much to offer, and you can see I now put them side by side with my own personal calculator, impact calculator. So this is the current state of my calculator when it regards all the currency in the market. Now, I'm not saying this is like 100% accurate. I'm not 100% sure of all my calculations, like the weight I used yet. So I don't tell people you can use my calculator and it's going to work fine. I don't know. Okay, we don't know. I just have my own personal weight for all this thing. But nevertheless, let's look into next week. What does the next week have to offer? We had everybody doing something, saying something for the next week. So there will be moves, but not so much. Let's see the major things in the market, right? The major things is where we get to see if there will be real moves in the market. So we have the US dollar, the euro, the British pound, the Japanese yen is not so good, and the Canadian dollar. Okay, so these are our major players for the next week. So, okay, with this being said, we've seen that next week is going to be a good moving week to an extent. Now let's dive into strength and capability. All right, now let's see what we are going to be trading. Basically, we're always looking for best performing against worst performing. This is just a direction on what we should be buying and what we should be selling. Basically, what should we be buying, what should we be selling? In my opinion, I like to take a look at the last 2 weeks. Last 2 weeks information. Okay, I have The high impact is neutral for the last 2 weeks. The low impact news, medium impact news is also neutral. Wow, this is not so kind. Okay, we have neutral. We have neutral again on the medium impact, and then on the low impact, I think the Australian dollar is becoming something you should sell if you see it from what the information we're getting. And you can see in general it is not so good. It's not so good. So the Australian dollar should be selling against what now? Against what? Let's go with the majors, right? The majors: US dollar, Australian dollar. So right off the bat, you should still be buying the Australian dollar as compared to the US dollar based on the strength in terms of the chart, right? But over here, let's see. The Australian dollar tilted up a little bit in the weekly, but the US dollar is still plummeting hard. But you can see that if you go down to the daily, you'll find that the Australian dollar has now gained strength slightly above the US dollar. And the US dollar is absolutely very volatile right now. I won't tell you to buy or sell the US dollar right now, because we have Trump making crazy news at any given point of time of the day. So it's quite risky going against the US dollar or going for the US dollar, in my opinion. So let's see, gaining strong, gaining good. So if I should be looking into the AUD USD, right? You should be looking for buying opportunities. And wow, you can see that right there. Heavy buying opportunity ongoing. So let's do our analysis. Straight off our analysis, we can see that huge rejection. This is like a very strong rejection. Price heavily afraid of whatever is down here. People say supply is demand just down here, so much demand, but it's just the news, right? It's just the news. The economy is just following the trend. Following this situation, I want to see something happen on the weekly. So on the weekly, I do not have like a reason to even be in this market, and I do not even want to go down to the daily because I don't know how to scroll down for the 1 hour time frame. But before I move forward, I want to divert your attention here. So I have a trade here on the Euro US dollar, a buying trade. Before I even move further to see if I'm going to keep this trade, I want to see what's been happening in the Euro recently, right? Recently, the last 2 weeks, I can see lots and lots of negative ongoing, but I won't just decide like that, right? Okay, they are quite neutral on the higher side, bearish on the other hand, and recent news says that the euro economy is weakening. It's weakening strong against the US dollar. Let's see, against the US dollar, because I have a trade there that I really should be careful of. That's why I'm doing this analysis pretty fast. So on the US dollar, they're having actually surprisingly good numbers. Okay, what's the total? +4, so they're actually in the good range. +4 divided by 14. That's just slightly bullish on the medium impact. And on the low impact, oh, that's like a tie in my opinion. Yep, just slightly bullish. Okay, so it means US dollar is gaining some sort of economic strength. They just have issues with uh the Trump administration tariff, basically. And you can see over here, this is why I said I don't trust this downslide on the US dollar. And it means that this trade I want to take right here is a very risky one. And I'm looking at this trade off the 4 hours, right? You can see this large amount of consolidation ongoing right here. Price came so close to taking me in, but didn't. This consolidation is very risky, very risky in my opinion. I do not trust it. I do not even have a weekly reason to sit down here because this week just went out. So I'm supposed to remove this trade and reanalyze this chart. So let's go back to what we're looking at. Australian dollar, US dollar, I do not have a reason to trade this market. For the British pound, US dollar, if I'm looking at the chart just plainly like this, I don't have a reason on the monthly. On the weekly, I had a reason to be in this trade, but I don't think I took this trade. So there was a reason to actually be in this trade right here. Very good reason to be in this trade right here. I think I did not take it because I didn't see. Yes. Oh, it ran rapidly. So you can see I missed a lot of trade last week. Missed a lot of trade. So if I was to come into this trade, I would have waited as soon as I found this first guy run up, and then I find the second one, same thing. Third one, no return. I would have just gotten into the trade blindly from this point, from around here. Stop loss below my short-term low. Take profit at 2 risk to reward ratio. And you see it's so close to take profit. But I think it's a good thing I didn't dive into this trade yet. Because on the daily, there's a good reason why this should actually return on push forward if that will happen. But let's have our backings to this. What's our backing? Fundamentals. Fundamental. I don't need these two side by side. I just need this guy. So I already know the state of the US dollar. We're looking at the state of the British pound. Yeah, British pound. All right. So the state of the British pound says what's going on. Okay, they are quite neutral on the high impact news. This is confusing. I think they are bullish here. Slightly bullish on the medium impact news, recent release. And wow, this slightly bullish on the low impact news. Overall, what did they have? British pounds against the US dollar. Okay, overall, you should still be looking to buy British pound compared to the US dollar. Looking at it here, you can see that British pound high, US dollar low. Let's give it a view on the monthly. Obviously, British pound strongly way away from it. Weekly and on the daily. Yep. So buying this market is still a very good opportunity. Buying this market is still a very good opportunity. Waiting for it to do some sort of retracement though before I attempt that. Waiting for it to do some sort of retracement before I attempt that. New Zealand dollar, New Zealand USD. Okay, so this was the market where I spotted a pattern from DAX. And you can see that pattern has gone forward to make 2RR return. I think 2 or 3 now. Yep, 3 risk to reward ratio return right here. So if you had entered this trade and you had a better stop loss than I did in that trade I took, you would definitely be basking in massive amounts of profit right now. In fact, this thing is going up to 4 times the reward for the risk. That's a really good strategy. That's a very good strategy. If I spot it again, I'll try to post my stop loss in a very reasonable location. Okay, but nevertheless, back to my own strategy. Should I be buying the New Zealand dollar against the US dollar? Well, in this case, I think yes, I should be buying the New Zealand dollar compared to the US dollar, and we've already done the analysis prior, and we have reasons. But currently, I do not see a clear setup for myself. So in other words, these 3 markets, I still do not see a reason to come in there yet. The Swiss franc against the US dollar. Let's see, Swiss franc overall. Overall, I think you should start letting go of the Swiss franc recently. Overall, right? Overall. Well, let's see the recent phenomenon. In the recent times, what has been happening? Okay, so the most recent news is very bullish. The last sets were not so bullish and they were just low impacts. Okay, so it goes to say that the Swiss franc, I'm expecting some sort of strength renewed compared to the US dollar, and you can see that slight tilt upwards on the daily, the weekly, and on the monthly. Okay, you should still be buying the Swiss franc against the US dollar, meaning you should short this market if you see the opportunity. But I just don't jump into markets. I wait for my own strategy to build up a stance. Okay, and as it is right now, I do have two locations to look out for. So I have this and I have this right now. So carrying out my analysis, my deeper analysis, I can see this is one overlapping and this is another overlapping. So I kind of have a good reason to put this market into consideration this week. I do have a strong reason to put this market into consideration this week. Selling this, shorting this market is really worth it when I see opportunities within my zone. I'm gonna go down to the 4 hours and chill for this guy to perform miracles, right? We're gonna chill for it to perform the miracles we need. And so what I'm basically waiting for is for price to, resist a little bit by pushing upwards and then creating a sharp turn and start going down. So I have one market where that is currently happening, but this consolidation is tricky, so I'm not entering it yet, and I want price to go above this level. But before I get down into this one, let's finish with the US dollar pairs. And then last but not least, we have the US dollar JPY. I've not done the rest USD here against the euro. Okay, so it's just against the euro that's left. So against Japanese yen, let's see the recent Japanese news. Checking out the Japanese yen's fundamentals, I realized recently they have been more neutral, and overall, right, against the US dollar, it seems like the Japanese yen is slightly weaker than the US dollar. Slightly. Why do I say slightly weaker? You can see overall here is negative 3%, while the US dollar is on positive 14%. That is a bit more neutral, than a bit more in the positive direction than the Japanese yen. And even in the high impact, you can see that there is a clear difference. Allow me put up I just want to put up something for you guys to be able to see it clearly. Okay, so you can see it right here. This is the Japanese yen and this is the US dollar. That's 0% against 11% positive. So in this opinion, buying the US dollar makes much more sense, which is buying in this market makes much more sense. But you don't just dive and buy, right? What do you do? What you do is you chill, hold on this, wait for it to start showing signs of bullish move before you even attempt. But I don't think this is going to properly represent the current market situation, especially with China and the US. It's not going to really work fine for it. You can see right here is neutral, and even here you pull out the history graph, you can see on the monthly Japanese yen seems like it's way stronger than the US dollar and the daily. So these are markets where the US dollar have like serious the tariff issues have serious impact, and you should be careful around these locations, around these zones. You can see that weakness beginning to show, that weakness beginning to show, and power coming up. So this is it for the US dollar. I don't see an opportunity here. And then for the euro US dollar, for the euro US dollar, recently on the euro, what do I have in the recent weeks? What I have is, I need to turn this off. I'm sorry. What I have is on the high impact news, the euro is strongly neutral. That is the main refinancing rate. That's the bank rate, and their CPI is quite, in fact, they are just neutral. Everything came out as expected. the which is good news though. On the medium impact news, they seem to have gone into the negative side recently, so they are sliding downwards on the medium impact news recently. And then on the on the low impact news, they have completely fallen apart. Now, I like to look at these recent moves, and that recent moves tells me the direction that the market is likely tilting towards. So this market is tilting towards the negative side, and I think that should be printed here. When you look at it, you see it's still looking like it's strong because the older news available, right? The older news available is still helping. What do I mean? So if I take out only in general, right? This is it. In general, the high impact news in general is still bullish, whereas it was neutral last week. That's the only news that came out was neutral, but in general, along with other news, it's still bullish. The medium is still neutral, while the low one is quite bearish, making it just a little bit not so good for the economy. Get it? So looking here, the euro still seems like one of the best buy compared to the US dollar. Yes, it is, but you can see that tilt starting to show, tilting downwards. So that tilt might be what I'm talking about, right? That tilt is what I'm talking about when I say I no longer trust these daily moves that I was looking out for. Instead, now I am much more focused on my original approach, which is this. This is a weekly fair value gap. So this is my original expectation, original approach. I believe the euro is still bullish in the long run, right? But I won't just dive in and take a move, right? I'm going to be ending this trade. If I can't delete it when the market opens, I'll try my best to stay awake all night to get that done. And on the 4 hours, I will simply be waiting for the market to do what I expect it to do best, right? Take out this low. I think I have too many lines appearing here. Take out this low, and it has positions where I should be looking to buy. Position like this one. This is a very good demand zone. Very good demand zone on the 4 hours. Now on the daily, we can't find the demand zone within this place, right? Because there's a daily fair value gap right here, seated right here, and hoping to stand. So price might come within anywhere in this area, might just slightly go below it and then push further. It might even go like lower and then test this zone, this resistance. You can see this is a support zone right here. This area is a support zone. So there's a lot of confluence around this area. Let me just put that zone here. So this is it. So you can see that within this whole place, this is the place that has the most confluence, this area. So price is likely going to find its way towards here or within this area, and then most likely push up. So I hope this trade doesn't key in, because this trade has a very short stop loss right here. I was hoping for the daily to come in and move in my favor, but this has a very short stop loss right here, and I might get stopped out when this trade opens. It might have even gotten to my stop loss already. So this is it for the majors, right? This is it for the majors. Now let's look at the other things I have right here on this place. I have with me, I'm monitoring the Euro New Zealand, and on Euro against the New Zealand, I have this setup right here. Now this setup is what I'm talking about. A 4 hours bullish sharp turn, a fair value gap in, as you can see, which is right here, and then a fair value gap out almost immediately. But I have a problem. I'm not having a good fair value gap out. One, secondly, I'm not having a market structure shift, MSS, right, which is a break of structure. I'm not having it yet here, but I'm having the biggest confluence. I'm having the biggest confluence, which is in and out. Now, people would have taken this. I don't advise anybody to take it when it's this tiny. That's why I have it here, for example. And I'm expecting this to have pushed strong. So in order to second if this is worth taking, I'm going back to looking at the euro against the New Zealand dollar. Now, the New Zealand dollar, as I know, is quite strong recently. Quite strong. Against the euro, it seems like I should be buying the New Zealand dollar. And if I come back here, the New Zealand dollar really tilted, like really pushed ahead compared to the euro. And putting that on this graph, you can see the New Zealand dollar tilted up strong. So I think we're facing that consolidation right now. That is the consolidation we're facing. You can see it came up very close to it, and because Saturday and Friday close off from business, a lot of people closing their order, we see this slight tilt downwards. So tomorrow we might end up seeing this New Zealand dollar go above this Japanese yen and possibly above the euro, which will lead to more of a bearish market here, because the New Zealand dollar is gaining strength, right? It's gaining strength. And from here I can see it. Remember what I said about this candle being very risky. When I saw this, I didn't like it. So there's a high tendency this would lead to bearish situation. So this might lead to price taking out this position, coming back for a retest, and most likely coming for this other one. So we might be in that situation. This might be what is happening, except again, we have news coming up, right? We have some news coming up on the euro. We have some news coming up like consumer confidence, and then some big news on the euro also, alongside the New Zealand dollar on the same day. And the New Zealand dollar is going to be releasing trade balance tomorrow. So these informations will severely determine what we're expecting to see. So after the New Zealand dollar trade balance is released, we might see a move either upwards or downwards here. So I'm not too certain of this market yet, though I am putting my eyes on it. Now, New Zealand dollar against the Swiss franc, this places similar situation right here. New Zealand dollar is gaining very strong. I don't know about against the Swiss franc, so let's check it out. Against the Swiss franc, the New Zealand dollar is gaining very hard. Even against the Swiss franc right here, you can see it is likely going to tilt upwards depending on that news. That news again, the New Zealand dollar trade balance. We're hoping for that news to come out and give us some figures, then we will know if we're still chasing for this supply zones and then this supply zone next. So we don't know yet, so we're just chilling on this market right now. The Australian dollar, Japanese yen, they have very similar situation. We even printed very bearish fair value gap, but like I said, I'm waiting for price to take out this low and possibly find its way within this zone before I can look into this market as something that's viable to trade. The euro, Australian dollar, this is another risky market. This pushback is so strong, too strong in my opinion. You can see that wick, this doji candle is too strong in my opinion to come back here. So we've had the first contact, almost first contact. So we're waiting for the first contact to occur. There's no contact here, there's still a space. Waiting for that to happen before we look what to do with this market. The euro, British pound. Now, this is a very risky market. This is a market where I initially expected the price to push and come down here and push up, but right now I don't think this is likely a good position. I think the market is going to come like this and then even fall down even more. And why am I saying that? So These are the two pairs that are so closely related to each other, and you can see that the British pound overall is better than the euro overall, right? Heading into this place, you can see the British pound and the euro so close to each other, which is a very risky thing to involve yourself with. If you start on the monthly, you can see that intertwining, the British pound weakening against the euro. This is historical data, don't forget. And you can see on the weekly, you can see the British pound gaining back on the weekly. And then on the daily, you can see the British pound seriously tilting back upwards towards the euro, which is telling you that there's some sort of neutrality, there's some neutral grounds here that you should be careful of. So this is a market that you're not certain of who is better or who is stronger. And looking at it on the monthly, I'd say it's best to remove all analysis from this market for now and just observe, because the month is printing a kind of move that, well, in my opinion, is really risky, really risky. I do have my usual weekly fair value gap right here, but I don't believe this is going to be holding anything. I don't believe this is going to be holding anything. So there you have it, my major analysis. AUD Swiss franc, let's see. Okay, so AUD Swiss franc, I still haven't gotten a mitigation at all, so I'm not even bothered. On the dollar index, so the dollar index has been plummeting for weeks. It's been going down, and even more. So we expect, this is bad. I don't even expect anything anymore from this thing. I don't even know what's going on with it anymore. But let's just watch if it bounces back up and pushes downwards. All right, people, so this is my analysis for the week. I have looked at a lot of pairs today, and to my biggest surprise is this market is not easy to predict. It's not even easy to understand in the first place, let alone to start predicting it. But it's a good thing that the market is moving in the way it's moving, and it's a good thing that we're learning it every day. I'm now able to create metrics for fundamental analysis, and I hope to become better over time. I hope you too become better over time, and I hope this analysis is something that you can also utilize to get funded in your prop firm challenges, and also make money on your real account or even on the prop firm account too, and get your payouts. For me personally, I'm on a journey to getting there, and I will get there slowly but eventually, and that is all that matters. Eventually I will get there. Until then, I would like to tell you thank you all for watching. It's been plenty talks with Chuksniki. I am Chuksniki, and do hit the like button, hit the subscribe, and share this video to people who you think might find it valuable. I might have to cut the analysis for each currency pair and post as separate videos later in time. I might, if I have the time and strength. I have a job, in case you forget. But until then, I'll catch you all on another one. Peace.